In this presentation, we will record a transaction related to a short-term investment becoming due and having a deposit from that short-term investment from the investment, something like a savings account or CD, to our checking account. That investment including both the principal that we originally invested and the interest, the earnings that we had on that investment within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. To get an idea of what we are doing, we'll first run the report and go to the reports on the left side, running our favorite report, that being the balance sheet report. We're going to change the dates up top from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. As we scroll through this report, we'll see that we have these investments. This is going to be an investment to $12,000. Now, when we track investments, they're going to, of course, become due at some point in time. We might be investing in stocks and bonds, in which case we're investing in order to get earnings in the form of dividends and interest, capital gains. We're going to say here that this is going to be some type of CD where we put money into and it's going to become due at some point in time, and then we're going to get that money back, plus we're going to get the interest that we have earned on that money. Once that happens, it's going to be deposited into our checking account, and we're going to record the increase in interest at the point in time that it becomes due. And this could be the case if we have, for example, a CD at a bank. We put some money into a savings account in order to earn a higher degree of interest, and we told the bank, just put it into our checking account at the point in time it becomes due. Well, then it'll be in the bank, and then once it becomes due, they'll put it into the checking account, but the amount in the checking account will include the original $12,000 plus any earnings on it, any interest on it. So in that case, we're going to have to take it out of the short-term investments once it becomes due because it's no longer here. It's now in our checking account. Oftentimes, we won't see this transaction until we actually do the bank reconciliation, and we'll say, hey, it must have become due because now I have another 12,000 something in my checking account. We're going to say that we saw another 12,250 in our checking account. And we're going to go, well, where did that come from? That's great. If we go into our short-term investments or into our balance sheet, and we'll have to say, well, that looks an awful lot like this short-term investment that we had in a CD. Maybe it became due, and now it went from here into our checking account. However, the amounts don't tie out. Why don't they tie out? Because we earned interest. We earned interest on the investment. That's why we took it out of the checking account in the first place to put it into the investment. So that's our goal now. We're going to have a deposit in our checking account. The deposit's going to be different from the normal kind of process of a deposit. Most of our deposits, as we hope, are coming from customers. This deposit is coming from a short-term investment, something like a CD, savings account that's now become due. We can see that savings account on the balance sheet, and we can see the deposit in our checking account for something over this amount, that difference being the interest, the earnings that we have. So that's what we're going to record. We're going to go up top, and we're going to do this with a deposit form to fill this out. We're going to select the plus item up top, and we're in the banking section, and we're in the deposit. So we want to make a deposit type form. Making the deposit, it's going to take more than just 2 accounts. So we'll use the deposit form to do this. We have the checking account. We're going to say that the date is going to be on the 6th of February. So it's going to be 02/06/19. So 02/06/19, that's going to be the date. Now, as we scroll through the deposits, you'll see that we have these deposits here related to sales receipts. This is the normal process. This is the deposits that we have on hand in undeposited funds that we typically go to the bank with at the end of the day. That's not what we're talking about here. We're imagining here that we checked basically our checking account and saw that we had 12,250 in it, and we need to record that on our side on the books. It's not related to a customer sales that we made that we haven't gone to the bank yet. It's related to this investment that became due, now rolling into our checking account. So if we scroll down then to here, we're going to see the other area of the deposits where we can enter data. We can enter basically the accounts that we're going to enter for the deposit. So once again, we're going to say this is from our bank. So it's going to say Chase is just going to be the name of the bank we're going to use. And it's going to be a short-term investment. So the other side of this is going to be the short-term investment. In other words, the deposit is going to go up to the amount of the deposit we saw going into the bank, which will be $12,250. But we're going to break it out between two sides. One is that the amount in the short-term investments is going to go down. That other current asset where we saw that $12,000, it's going to be the other side. It's going to go down. Description, we could say the investment came due or matured, something like that. The payment method, we're just going to keep it as cash. It actually was kind of a transfer. It's going to roll over from one savings account of Chase to the checking account within Chase. And we're going to say that the amount is going to be $12,000. $12,000. That's not the full amount. We got $12,250, but that's the amount of the allocation to the short-term investment to bring short-term investment down to zero, nothing now being in it. And then the other side is going to go to Chase as well. And we're going to say that this is going to be the interest income. So there should be an account called interest income, and we'll check that. If we type in interest, we don't see anything. We see interest expense. We don't see any income account for interest. So I'm going to create an account. We're going to say interest income. So we'll make an interest income type account. I'm going to say tab in order to add that, or select add that account. Now the interest income is a type of income, but it's not part of our normal operations. And because of that, we may not want to put it up and group it with the normal income. We might want to put it kind of on the bottom to say, hey, this is kind of funny income. It's not type of our normal operations. I don't want to include it in normal operations. I'm going to put it on the bottom as other income. This is just kind of other random stuff that happens from time to time, not things that we're going to depend on a month-by-month basis, and therefore shouldn't be in our normal type of comparison. It's going to be interest earned in the detail type. Interest income is going to be the name, no sub-account. Save and close. And then we're going to have the same description here, so we'll keep that description. The payment method, we'll keep it at the cash. The amount then is going to be for $250. So then that's going to give us our full transaction here. We've got the amount that we saw in our checking account, $12,250, that increased to our checking account, that consisting of the short-term investment going down to zero, expiring, becoming mature, and $250 representing the earnings over and above the original investment, that being a form of income. Let's save and close and check out the reports on it. We'll say save and close. And then we're on the balance sheet. Check the dates up top. So I'm going to change the ending date to 12/31/19, so January through December 2019, and run that report. And then if we scroll down, you'll see that the short-term investment now has a zero balance. It's nice that it still shows it there, because then we can see that there was activity in it, although it's now zero. So we can select that item, see the activity. Here's the 12,000. Here's the deposit that we made. If we select that deposit, the deposit wasn't for 12,000, but of course was for the 12,250. The other side not decreasing this account, closing that back out. This needs to be 12,000 to bring it to zero. The other side being on the profit and loss or income statement. So let's go back to the report summary. Let's take a look at the profit and loss or income statement. We'll do that in a new tab by right-clicking the tab up top, duplicating that tab. I'm going to pull this one to the right so that we have the balance sheet, and then the one we are working on where we will do the income statement. We will see the income statement or profit and loss by going to the reports down on the bottom left. It's going to be a favorite report of ours. That's the profit and loss. It's a good one. We'll change the date range up top from 01/01/19 to 12/31/19, January through December 2019, and run that report. Then if we scroll down, you'll notice it's not in income. We didn't include the interest income up here because, once again, we don't want it in the normal operating activities. We want to compare January to February. We want to compare year to year and not be distorted with kind of funny things that aren't things that we can depend on, because that makes it more difficult to budget. So we're saying, hey, here's our normal operating income, and here's the funny thing that happens. It's kind of outside. This is just, an investment we had. We made interest. We're not in the business of earning interest income. We're not stockbrokers. We're not investment people here. We sell guitars and do guitar lessons. But we did have some interest income. It's down below, and that's going to increase our total net income. So we'll have the sub account, and then the interest if we select that 250. Then we'll see the deposit that was made. Obviously, the deposit was not for 250. If we select that item using the auto zoom, we'll see that the deposit was actually for $12,250, the other side of it going to the investment, which became due. For more accounting information and accounting courses, visit our website at accountinginstruction.info.